Hello. Hey guys, how you doing today? Welcome back to the channel. It's your boy Edwin from the Dividend Passport Bro. So we're gonna be looking at a couple of things today. This is gonna be a quick video. Try to keep it under 10 minutes. As you guys know, this is entertainment purposes only. Do your own research. Okay. So looking at the channel, we're up to 55 subscribers. So we're doing good. We're doing good. We got 55 subscribers. Thanks guys for subscribing and the questions. I appreciate those. So we're gonna skip over that real quick and go to the overall of the channel, right? So overall income, we're at 64,000 annual, okay? And then of course the market today was a red day, so I bought a few things. They haven't updated yet, so by tomorrow this number gonna change. The chart swap, I think it went down probably at about $1,000. We still got, negative here, 2,000. But I think it went up about $1,000, somewhere in that range overall. And then Fidelity, I'm still positive in Fidelity, like $24,000. And then of course, as you guys can see, I bought more positions with margins. So I bought more positions with margins. So I got close to $31,000 in margins that I've used so far. So I'm going to ease up on the margins. I got about $80,000 or so that I can buy. I think right now my purchasing power, when I checked it yesterday, was about 80,000 still available to me. So, but we're going to hold up on that and see what we can buy and sell some of the positions that I have. I want to show you guys something that is quite interesting. This right here, this app, it pretty much shows my Fidelity portfolio, right? So as you can see, the number, it look like this is already updated, and the Fidelity, the one in the other app, I haven't updated yet. That's one usually slow. But the actual income, so the profit is about the same, it's close, right? So the actual income is different here. It went up like 1%. So this is 26,000, and then in the other app, if we look at it, it says 33,000. So sometimes, I mean, these apps, they just estimate, so you don't take them serious. And even the app, the one that comes with the actual brokerage, sometimes they don't even update. So that's why sometimes I like to use multiple and then use the average between the two. But we still pushing. So if you can see, I have the breakdown of my Fidelity portfolio. In funds, financial, real estate, industrials, energy, consumer staples, consumer discretionary, healthcare, utilities, information technology, communication services, and materials and others. What in others? Let's see what's in others. So I got these two. Okay, I mean, they haven't get a name, but those two. So these are pretty much what I have, right? I have lots of positions that pays. I've cut a lot of them down under 2% a yield. I mean, yeah, 2% yield. Nothing less than 2%. I might have one or two that paid less than 2% yield. Now, of course, like I told you guys, I got into the high yield dividend because I needed to generate more income. And then with those income, take those income and buy more lower yield positions. Everything is risky, but you have to invest, right? You invest. There's different ways of doing it. Yes, I'm doing it a little bit more riskier. But like I say, I don't need that much money to live overseas because I plan to live overseas. Right now, I have more than enough to live overseas, so I can be a little bit more, risky, I guess, or higher risk, if you want to say. I wanted to show you guys something also. This is very important. So over the years, I've been using this spreadsheet. It's like a monthly budget. So as you can see, I got 1, 2, 2 here. It's like having 2 jobs. It's like having 2 jobs, 2 income. right? So if you're getting paid, if you're not getting paid by the week, you're getting paid twice a month. So job one and job two to get on the 15th is the January. So it'll be the 30th. So you getting two incomes. So depending on how much you're making, usually I recommend putting 20% into your emergency fund and 20% into your 401k, right? Now this is on the job. If you have two jobs, right? If you have one, you can say you're going to do 10% of whatever the match is. So if your job matching you 5%, you can match 5%, and then you take another 10%, put it into your emergency fund. Something that pay a higher yield, somewhere 4 to 5% yield, and you put that emergency fund. And you need usually 3 to 6 months worth of emergency. So if you're spending $3,000 a month on all your bills, then you need to have $12,000 saved into your emergency. That's standard practice, right? So you need 3 to 6 months, right? Save up. So if you need 6 months, you need $24,000, right? Save up. If you need to go higher, then you need 36. So the number just go up based on what you have. All right, and then down here, fixed income. So fixed income, as you can see, your fixed income should be the 50% of your actual income. So you got 20% going there, you got 50% going here. So the number can be higher, right? So you're gonna put everything that you pay for the month in here. Everything that you pay for the month, you're gonna put it in here. And once you put that in here and put in the amount what you pay, this sheet is gonna calculate the total amount, right? So let's say I have car, let's say $1,000, make it even, and I have house, we'll say $1,700, okay? And then if we go down to the bottom here, it automatically calculate those total expenses, right? So if you have light, water, and gas. All right. So let's say light, we'll say 100. Water, let's say 40. And gas, we'll say another 40. All right. So that number it calculates, right? So usually when I pay my bills, I write pay at the end. Now, if that's something, let's say if I have a car, my car is $60,000, right? No, we're not gonna make it that high. Let's say the car is $12,000, $12,000, and then the house, let's say is 150. So whenever you pay, so this is your debt, right? This is your debt that you have. So it calculates your balance every month. So when you pay down, when you go to February, this balance is going to change. So that debt pay down is going to show up on here. And then also, I got another 30% here for your flexible expenses. Over here, I got like laundry and groceries. I mean, laundry is buying detergents and stuff. It's not that much. And groceries depend on what you're spending. When you add that amount up, let's say you could say $12 a month for detergent, and you could say groceries $200 a month. So that's a different price thing here. And then over here, if you have a business, you can add that. It will add a number for you the same way. I mean, this part wouldn't add a number for you, but all of this here will add a number for you. Now, if you guys need this form, you can ask for it. Now, so if let's say on your job one you got 1,000, job two you got 800, so you got another 1,000, and then 800. So this is your income, right? So this is your income, $3,600. And then if you go down here, this is your expenses, right? So you add those up. So that's about $3,000 right there, right? So you add those up, you still have $600 left to do whatever you want. So out of this 600, for me, I will invest $500. or maybe let's say $300. I would invest $300, and you already have your emergency fund and stuff. So the extra $300, when the next month come, if I don't spend that money, when the next month come, when I get my income, instead of investing $300, I'm gonna take additional $300 and add to the $300 that I have. That will give me $600, right? So every month I will take money for that money and add it to the other month. So it's kind of like compounding on your own, if it makes sense to you guys. And just invest that. Okay, so I wanted to share this with you guys. This is what I use. Now, if you guys need a copy of this, let me know, and I'll share it with you guys. The key is to start. Once you start investing, you have to start. You can pick any of these funds. Let me go down here real quick. Go down to portfolio and then holdings. So these are all the funds that I have in my Fidelity, right? So this based on the highest yield. Now, highest yield is not always good because you can see it mostly red, right? Because the yields are higher. Now, let's see if we can make this. Let's do 100. I don't know if we show 100 of them. Yeah, so we got more. But you could say, we can flip this around and go for the lowest yield, right? So the lowest yield, you can see I got Home Depot, I have Kroger, and these are all paying 2%. I might have some here that pay 1%. But this one right here, I'm planning to sell, but I'm going to keep it to the market, get better. I got Caterpillar, Lowe's. It's going to be up in the next year or two. It's going to be over 2%. I got Colgate, Palmolive. I got companies that you guys use every day. Discover Card, 3M, the Max, McDonald's, Lockheed Martin, and the list goes on and on and on. Any one of these you can buy and not worry about it. Anything up to about 10% in this portfolio. If you got UPS, you got royalty income. You got these guys, AT&T. I mean, they've been doing okay, but they're all right. Pfizer, WP Curry, Main Street Capital. These guys are okay. They're paying 5% yield. So you can go down and pick anything out of here on the 10%. Western Union, BlackRock. This is pretty good stuff right here. They're down today, but 8%. So you can pick any of these and invest in them. Do your research, but you're not going to be, and don't worry about it when they go red. On red days, buy. On red days, remember, buy on red days, because the market always go back up. Now, if the reports come that the company about to file bankruptcy, go out of business, okay, you will try to get out of that because everybody else is going to be trying to get out of that. But if they're not doing that, it's not just one or two companies down. The whole market is down. So you're going to buy. Because within the next couple of days, when they start to go back up, you're going to see the gains. And, start small. The goal is to get the first $1, and then that $1 turn to $2, and then that $2 turn to $3. Because every time you get that increase, you get that dividend, right? You get that $10. That $10 add to the $100 you have. So the next month you get in dividend on the $110. So when you get that dividend $110, it might be $11 or $12, right? Added to that 110. So the next month, now you get in dividend on the $125. This is a little snowball. The higher it goes, it might take some time, but if you want to do it faster, you either add more money or invest in stuff a little bit more higher risk, right? But it can be done. Anybody can do this. There's nothing special about me. I ain't getting no training for this. It took a long time to get to where I'm at. 5 years, almost 5 years I've been doing this. So, Jeff Q, this is good. I got this. It paid 9%. This is from JP Morgan. Okay? So you can invest in that. Do your research first, but you can invest in that. Don't be scared. Because I mean, the bottom line is you want to be careful. But when something happens, you go to the good Lord. You can't take this with you. You're going to leave what you can for your family. Okay, guys. I don't want to make this video go too long, but thanks for watching. Subscribe to the channel, and guys, don't forget to get into the Discord. Sign up for the Discord. Okay, when you sign up for the Discord, you can put it in the discussion, the comment that, hey, I signed up for the Discord. Okay, guys, sign up for the Discord. I haven't stopped putting information into the Discord yet. I'm going to be putting more stuff into the Discord because it's easier to just type information into the Discord and sit down and make videos. That will be more helpful. And if you have any questions, it's easier to ask it in Discord because you're not worried about some strangers, talking crap about you. Everybody in the Discord is going to be part of this family as we build this community, guys. So thanks for watching. One more again, subscribe to the channel, like, comment, and share. Okay, guys, have a great day. I'm going to upload this video right now for you guys. Peace.